Today, the bulls bounced off the weekly support level. Will the CPI data be a catalyst for the bulls or the bears? Let's answer that question by looking at the charts. So first up, let's take a look at the weekly chart of SPY. So let's crack open this chart and see what's going on in the stock market today. All right, so starting out on this weekly chart of SPY, we can see that we're starting well on our way from the bounce of the breakout level, which on the weekly chart is this support at SPY 407. And I just talked about this over the weekend, how the charts are looking very bullish, and just one day into the week, we're already starting to see a bullish impulse off support. So this is why time and time again, I tell you to stay objective and follow the chart, because the chart has been broadcasting bullish signals going all the way back into January. And now we're seeing a continuation of a lot of that bullish price action into February. So if you're having trouble objectively following this market and you're looking for a trading community, come check us out at the Stocks Channel Discord, because we are absolutely crushing this market. We are strictly price action traders. So we're always looking at the price action and determining which trade is best, and we are absolutely crushing this market. I also have a trade alert service called Bank Trade Alerts, which is also crushing this market, which is a trade alert service that only trades the TQQQ and SQQQ. And as you can tell from the chart of the top performers year to date, Bank Trade Alerts is absolutely crushing this market as well. Bank will send you all of your buy and sell alerts, and it's a swing trade service. So if you need help in this market, you know exactly where to find it. All right, now let's take a look at the daily chart of SPY, because tomorrow is CPI data. So generally speaking, these data drops are just going to be a catalyst for the market to continue doing what it's already trying to do. So if we just look at the price action and the trend, we can see SPY did get the bounce off of support, and we are currently above all of the moving averages with the price action. And we do have a very established bull trend, and that is why we continue to see buyers of the dip. There are still bears out there doubting this bull trend, and there are still bears saying that we are crazy for buying the dip. But if you look at the chart, it is only the dip buyers that are actually profiting in this market. The bears are saying things like bulls are being stupid and bulls are taking on too much risk by buying at support. But if you look at the chart is telling you to buy at support, and they're just stuck in some sort of biased bear land where they just can't physically see the bull trend because they're blind to it. So going into CPI data tomorrow, there is a very good chance we continue this trend, which means we should see SPY continuing higher and breaking through this resistance at 414. Now, obviously, there is always the chance that the trade can go in the other direction, and that is why you simply need to manage a risk right down here, which is going to be right around SPY 404. If SPY starts reversing after the CPI data and loses the support, then you simply manage a risk and you could start reducing your long exposure and getting ready for what could be a breakdown in the bull trend. But we need the price action to prove it. All of the bears that continue to say this market is going to crash and they're trying to call every single green candle a top have continued to be wrong time and time again, and this is still a very powerful bull trend, which means we should not guess the bull trend is going to fail. We should simply wait until the price action proves it. So don't be part of the traders that are guessing and trying to say the sky is falling and the market's going to crash. They are not being objective traders that are managing risk. They are going against the trend, hoping to be correct, and that is called gambling. If you want to be a disciplined trader, you need to manage risk and you need to focus on where the market is going, and not just follow all of the fear and doubt going on around the market right now, because as you can tell, the market is climbing the wall of worry and the market is continuing to go higher. So going into tomorrow, we're watching two critical levels, and that is going to be SPY 404 as the support and SPY 414 as the resistance. If we break out above the resistance, we're very likely going higher towards 421 and then 425. And if we break the bull trend, we are very likely coming back down to the 200 daily moving average, which is right around 393. So you have very well-defined risk in both directions, and we are currently still in a bull trend. So stay objective, and if you're getting emotional, you're either too leveraged or you don't have a trade plan. And if you don't have a trade plan, stop what you're doing right now and go make one. I'm giving you all of the levels you need to pay attention to, and all you simply need to do is go watch how the price is reacting from those levels and execute your trade plan. On the NASDAQ 100 triple Qs, we were up 1.6% today, and again, the triple Qs are back above the bullish support trend line, and the price action is back over all the moving averages. So just like SPY, the triple Qs still have the bull trend and they are still bouncing off support, which is this rising 13 EMA, and now we are back above a rising 5 EMA. So there is a lot of support, and I continue to tell you this is a giant macro double bottom off of 260 while we're above the neckline breakout at 294, which easily takes the triple Qs into the 320s by March. So that's a technical pattern with a very high probability to play out, so I do expect to see the triple Qs marching higher, which means CPI data is likely going to be a catalyst for the bulls to continue to push higher. The bull breakout in the triple Qs will be back over 308, and then we have resistance between 311 and 313. And then above that, it's off to the races to close the gap at 322. Critical downside support will be the zone right around 299 and the neckline breakout at 294. And if we lose the support at 294 at any point, you need to get a lot more cautious of more downside, because we do have gaps to fill to the downside, with the first one being right around 288. In the Dow Jones, we were up 1.13% today, and the Dow Jones is looking bullish because it's starting to get bullish candles where we have no wick below the candle or above the candle, which is a very bullish pattern, and we are seeing the price action breaking out of the bull flag. Remember, we had a very impulsive bull rally from the October lows that lasted all the way through November, and ever since then, the bulls have been resting and consolidating in a bull flag, and now they're starting to break out. This could easily take the Dow Jones into the upper 350s, and the only resistance left is 343 and 346 before the Dow Jones is off to the races. So watch this breakout level right around 339, because that's now going to be a critical support. And if we can't hold the breakout, or this is a false breakout, then we'll be looking for support at the bottom of the flag right around 334. So as you can tell, the market is looking bullish if you're strictly looking at the price action and the trends. So if you're staying objective and you're trading what the chart is telling you to trade, then you are still looking for bull trades at this point in time. On the Russell 2000 IWM ETF, we were up 1.2% today, and again we had another bullish bounce off of a very critical support zone, which is the neckline breakout above 188, and the price action is back over all of the moving averages, maintaining the bull trend. The resistance to break in IWM is going to be this break above 193, and then above that we could run all the way back up to the previous daily high at 198, and then start marching higher into the 200s. Manage your risk around this critical support at 188, because if we break down below that support, it is possible we come all the way down to close the gap below 181. On the ARKK ETF, we are up 1.71% today, and ARKK is holding the support at the rising 20 daily moving average, which is a support zone right around 39.5. We need to see price action breaking the resistance at 40.4, and then the resistance trend line at 41.7, and then above that we could run all the way back up to 44.5 and 45.7. Manage your risk around the support zone between 38 and 39.5, because if we do break that support, we could come back down towards 34 to 35. On the VIX, we were down 1.02% today, and the VIX was trying to break out into the low 20s and got absolutely destroyed, closing at the low of the day with a very bearish engulfing looking candle. Remember, we just need one more day of the VIX closing back down below 20 to get a buy signal that we're going to see a breakout in the indices, and you're starting to see it playing out in the price action in the indices and the VIX getting crushed today. Just think about it. If there was a lot of fear and the market was about to crash, we would not see the VIX trading at these lower levels, and we would already see the VIX breaking out. On Bitcoin, we're currently down about 0.75%, and Bitcoin is coming back down to this breakout level and testing it as support, which is right here at 21,300. The bulls will try to make a stand there, but if they fail, we're likely coming back down to the 200 daily moving average around 19,800. Overall, this is a bullish impulse, and this is a buy the dip market in Bitcoin as long as we can hold up above these breakout zones. So do manage your risk around support, and if you are a Bitcoin bull, you are looking to accumulate for the long-term bull run that will likely take us out into 2025. And as a day trader, be careful, because Bitcoin is very volatile and you can lose a lot of money trying to day trade crypto. On Amazon stock, we were up 1.98% today, and Amazon did get a bullish bounce from the rising 50 EMA, which was that support right around 97, and we closed back over a critical support zone, which is right here at 98. From here, we need to see the bulls getting back over the 20 daily moving average at 100, and then breaking back over this critical resistance at 102, and then we should see Amazon start running higher towards 115. So get a lot more bullish in Amazon if it could break above 102, and manage your risk to the downside around the support zone between 97 and 98. If we lose support, we could come back down towards 93.5 and the gap fill at 90. On Microsoft stock, we were up 3.12% today, and Microsoft had a very early push this morning, going all the way up to the resistance zone yet again, which is right there, right around 274. And again, we continue to find sellers around that level. So we do have a gap to fill to the downside at 264, but we are bullish as long as we're above the breakout at 267. So as you can tell, Microsoft is looking bullish with higher highs and higher lows, and it does look like it's going to try to get another breakout above 274 274 with the next upside price target right around 283. Manage your risk at support at 267, the gap fill at 264, and the previous bounce zone right around 261. And if we break below that, you're looking for the gap fill at 258. On Nvidia stock, we were up 2.46% today, and Nvidia did bounce off of the support, which was right here at 213, and the price action is back over all of the moving averages in this strong bull trend. So you can stay bullish above the support at 213 because we still have upside price targets, with the first being the gap fill at 230.62, and then above that, the resistance will be 244. If we lose support at 213, look out because we could be coming back down towards this rising 20 daily moving average around 201. On Tesla stock, we were down 1.14% today, and Tesla is getting that pullback from that critical resistance right around 208, which means we're likely coming back down towards some support levels below, which is going to be anywhere between 183 to 187. And if we lose that support, we're likely coming down to the support trend line and critical support around 173. As you can tell, this is a bullish setup. We just need to see the moving averages catch up to the price to support the buyers. And as long as we see buyers between 173 and 183, I think we're going to see Tesla bouncing and start marching higher towards 230. On Apple stock, we were up 1.88% today, and the price action is back over all of the moving averages, and we're still holding on to this strong bull trend, which means we're likely going to see Apple trying to break out above the resistance at 156. Above 156, we start marching higher towards 163, and the critical support level to manage a risk at is right here at 150. If we break below 50, look for support around 148 and the gap fill just below 147. On the financials, we were up 1.15% today, and the financials are still looking very bullish because the price action is over all of the moving averages and we still have a strong bull trend. So with the financials looking this bullish, it's going to be very difficult for the market to roll over and die. The industrials were up 0.91% today, still looking bullish with the price action and the trend. The healthcare sector was up 0.83% today, coming back up towards this critical resistance at 134, and it does look like it is still marching lower in a downtrending channel. The energy sector was down 0.25% today with the second day in a row of the price action above the 20 daily moving average, so you can stay bullish as long as we're above this support zone right around 89. So jumping back over the SP 500, tomorrow without a doubt is going to be a catalyst, but right now the chart is telling us the market wants to go higher. So strictly following the price action and the trend, you know exactly where to manage your risk from, and you know exactly how to trade this market no matter what happens tomorrow. If you're panicking about tomorrow, you likely have way too much leverage, or you're just gambling on a binary event hoping that you win, and that is not how you're ever going to become a profitable and disciplined trader. Like I said in the intro, if you're looking for a trading community that knows how to stay profitable, come check us out at the Stocks Channel Trading Discord community. And if you want exact buy and sell alerts via email and text message, you can join Bank Trade Alerts, which only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.